Good morning, Mike. Give me just one sec. I'll have this chart published for everybody. Sorry, I'm running just a minute behind. Okay, there's the chart, and let me... Okay, so let's get started here real quick. Everyone should be able to see the screen now. Is that correct? Okay, great. So, let me run drawing tools. Had a reboot here this morning. Alrighty then. So, we're getting a little bit of a gap down this morning, which makes sense. We're trading near the bottom end of the overnight in NQ, which is actually off 20 points now, and ES is down 5. And so obviously being particularly bullish or particularly bearish hasn't helped very much. So as of right now, the Globex low is 1865 3/4, which is actually exactly where I'd set right at the top of the support area. We had responsive buyers yesterday in ES. So the biggest concern today that I have is below 1861.30, really below 1863, but that's why there's not a zone here, but there's a bit of structure right here at 1861 1/4. But below there, we actually have lots of room to the downside. And how do I state this? The concern is that all that area has to get re-auctioned. And so what that can create is a slippery condition for the zones where we don't get responsive buyers. So the way that I handle that in an area, these zones still usually get responsive buyers. However, what I like or would prefer to have the first time in, I need a move out of these zones generally in less than 15 minutes. If I don't get a response in 15 minutes, okay, out of here and I can't get my 2-point scale, I'll tend to close the trade. Okay, so one of the things I want to go over with everybody, because there may be some new people in the room, right, is that the way that I trade, I am trying... One second here, got it. There we go. I had something running that I didn't need running. I want to trade in a fashion that lets me put on an increasingly large number of contracts, particularly in the ES. Okay, but in order to do that, I need a relatively safe environment. So there's two ways to trade. You can try to trade with a normal trade size or small contract size because that's comfortable for a lot of people. And then the object is to capture larger moves. And I think that makes trading, at least for me, from the point of view I look at it from, very difficult, right? Yesterday in particular, what I was concerned about was getting either an open drive higher or an open drive lower. These have become particularly dangerous in the first 15 minutes to an hour, right? Where most people I've spoken to who've experienced significant losses have experienced that within the first 30 minutes to an hour when they're trying to trade smaller contract size but capture larger moves. And they tend to freeze up when we get this motion, okay? And psychologically, the problem with this is obviously we don't get this every day. What we expect, right, is at least a gap fill to find responsive buyers and push it back up. A lot of people really got hurt in this yesterday. Furthermore, when you have an area intraday, when you look at it, and you have an area that has a huge unauctioned piece like this, Okay, really all the way down to this point right here, okay? If it can slip easily down one way, it can slip easily up the other way. That's why, okay, even without zones, that's why when we ended up with structure right here, okay, and I was short yesterday right here at 72, okay, that's why when you end up with structure like this and we do break out, this is breakout and then retest. First we tested the front of structure, then we tested the back of structure. Now, it wasn't huge, but it was enough given the range, and then we were, and yesterday afternoon, with the exception of a bizarre negative 1,000 tick that we got here, for most of this period of time, we were plus or minus 500 on the tick. So we were moving, we had failed range extension originally. We opened here, we extended all the way down, we failed and re-auctioned it all the way back up. Essentially, almost no volume went off in these areas in a consistent manner, meaning we didn't build any kind of sideways structure to lean against. So the market simply came back and restructured and re-auctioned all of this in the same day because it auctioned this so poorly. This would have looked different if we started off like this. If we started off, re-auctioned, then broke lower, and kind of had a pattern like this, okay, these are what days that stay like trends, because when the buyers respond back up, right, they run into overhead supply. What causes the overhead supply? People come in here and they buy, expecting to get a push back up. When they don't get that push back up, right, we break down. Professional traders or larger traders won't freak out over a 1 or 2 point move to the downside, but when they get back up into this area, their initial reaction is going to be, hey, I want to get rid of what I was just upside down on, right, and reevaluate, which is why, okay, just like here, guys who got long here or short, either way, right, market moved against them, it came back in. If you missed this move originally, the guy right here is thinking, hey, this is my chance to get back in. He tried to buy, didn't work. The guys down here said the same thing. Okay, the top of structure didn't work, we'll try the bottom of structure. You can see that we paused here. We re-auctioned a second time. No one was interested in probing these prices lower. Okay, and then we pushed back up. Where did we push back up to? Right to the top of structure. Now, when your tick is plus or minus 500 in this area, this is the type of price action you're going to have, where you're going to have structure, breakdown, retest, right? And then we tried to push right here, right after the close. I guess there's some data. We tried to push to the back of this area. So how does that set us up for today? Well, first of all, we want to see off the open. Do we get an open drive higher or an open drive lower? We had a really wide range yesterday, which really sets us up to have an inside day today. Now, what everyone wants, usually when you're trading, is we want consistency. In other words, we'd like this volatility to continue. We would like it to continue either driving higher or driving lower. In this case, we didn't do either. We balanced the majority of the day yesterday. And that's why traders get thrown off. So when we're in an environment like this, it's hard for me to predict exactly where I want to find responsive buyers. I do know that right down in here, okay, I do know that I expect responsive buying in this area right here, this 1849 to 1851. That also puts us, based on the close, which was 1872, that would put us roughly 20 points down. Our range has been 20 to 30 points, so I would expect responsive buyers, both because of the structure that's sitting here and the amount of volume that went off on the volume profile prior. I would expect responsive buyers the first time in, and again, I will scale half at 2 points, and I will leave my trailers. If it works, I get paid nicely. If it doesn't, I get paid on half that position, and I will move stops to break even as quickly as possible, right? I would expect also at 1857 to 1855 responsive buyers the first time in, right? Again, I don't know if it'll be from the front or from the back, but I do expect responsive buyers when I'm in there. However, if I do not get this responsive buying quickly, or if we open drive lower, we open at that 1865, and we drive straight down hard into that 1855, 1857. Well, I know that this area is poorly auctioned, right? So I know that we could simply get a pause here or a very quick bounce and then break and come on down to this 1849, 1851, which is the first area where we actually have it pretty decently auctioned. Okay, and I'll cover that in just a second. But I am a buyer here. Below, keep looking lower. Excuse me. This zone is 18, by the way, 1845 to 1847. And, okay, so this is the way that I'm treating this area here. Based on what the tick looks like in this area, okay, if we're plus or minus 500 and we're just simply dribbling down like this and we're here in the morning, I will take a long somewhere in this zone. I don't know where yet, but I will take a long somewhere in this zone. I'll evaluate. If the tick is ranging greater than 500, meaning we're hitting 800, 700, 600 negative ticks and we're consistently in that area, probably will not be taking a trade in this area, and I'll be shooting somewhere between this 1843 and 1839.50. There's an open gap here, unfortunately, where normally I expect responsive buyers at an open gap. It's terribly auctioned in this area. We spent like a nanosecond here when we closed. So, again, I would like to see tick divergence, or I would like to see it pause, right, and maybe trap some traders in here and push higher. This would be a huge stretch from where we closed, up here at 1872, right? So if we get down to this 1839, that's essentially 30 points down. And again, I expect responsive buyers. I just don't know if it's going to be from this zone here or from this point here. The zones below here, let me give them to you real quick. I don't have them on the chart. So you know. Okay, 1824 to 1826 is important down here. This should be, yeah, that's correct. 1818 3/4 to 1820 3/4. Again, I'm not expecting to get anywhere near this area. Okay, 1830 to 1832. We've traded through this area quite a bit, and this was actually very poorly auctioned. Let me show you what I mean by that here real quick. It's easy for me to do without okay. Okay, so okay. See how we have these big ranging bars? So we have these big ranging bars where we didn't auction over them repeatedly, like, how do I explain? Okay, so this is a good example right here. See how we just poorly auctioned this. We just basically took off. So see how the market came back in and re-auctioned all of this all the way down here till it got done almost re-auctioning all of this, and basically where we had obviously that 1810 served as good support, right? At first it was a little iffy, but we ended up auctioning off a lot of volume in this area. But if you'll see all the way through here, basically from 1840, okay, so there was some decent volume that went off in this 1835 area, but there's not a lot below, okay? So what that means is those prior areas should provide support, but when we end up with those trend day downs where it just keeps busting zones, it's when we're in areas like this that are slippery. If you want a good idea of how that would look if it gets re-auctioned, right, if we go back to, how am I doing on time? All right. Because the structure is more important at this point to me on how it's trading, because the moves are getting so violent that we're not getting well auctioned at all. So if you want to get a good idea, again, of what that looks like, right? Totally poorly auctioned here. You can see here where they built up some volume in this area, okay, that we get pauses. But you can see in areas where there's pretty much it ripped through on the last move, right? It didn't sit through structure very much. Right here we got just a hair of structure, and if you look at the volume profile, you'll see some volume went off in that area. But you can see in these zones, right, we slipped through on the down move very easily. And look, this time through, we slipped through it. We paused, but we went back up until we finished re-auctioning all of this. Then we took another pause. And then you'll notice above, again, all of this poorly auctioned. It was very easy to move up through this, and it makes taking contra trades much more difficult. So if you're wondering why your trades are getting busted, this is why. We're just not auctioning very well in any one particular area, which is why you have to use good rotation size and range extensions, meaning, and my clients know what I mean, but use the 10-point rotations to figure out at least where short-term buyers will get exhausted and you have a chance of getting a response. Also, with regards to taking the 2 points, and again, you got to remember these zones weren't here when these were constructed the first time at this particular date, right? The other thing you'll use for context, prior days high, prior days low. Are traders getting trapped above or below? And then also use the first hour high, first hour low. Because we're so poorly auctioned, you have to use those as reference points, okay? So let's go back and put that into context for yesterday. I don't think I have yesterday's chart open so that we can see it. Okay. So on yesterday's chart, obviously things were fairly foobar. We broke yesterday's Globex low, right? And you'll notice we never closed above. We never trapped above. And that would have been, obviously, that would have been key in the morning. When I got off, we already saw that we had open drive lower. I pretty much called it out. So as soon as I see an open drive lower, the reason why I say your best option, right, is to stand aside for the first hour, is you'll notice right as we headed towards 9:30, we got a reversal, right? I took a short here at 1872, but you'll notice everything above, right, was poorly auctioned, which is why I ended up covering it at 1873. Initially, I took this thinking that I had good trade location. This was about the halfway back point, right? And then I realized all this above had been poorly auctioned. I was, at one point I had 3 points. I scaled off a quarter at 2. Once I realized that I was in danger, I just went ahead and took a 1 point loss on the balance, right? And I stood aside. And then you'll notice we ended up using Globex low as the resistance point. And then we built up a lot of volume in this area. Also, we'd spent some time in here, a good hour, building volume. So that's why the market had to build structure, and that's why we traded the way we did in the afternoon. So if you look at that exact same concept today, right? The first area where we have okay, so the first area where we have structure, where the market will slow down, will be right in this area from here right down to here, okay? I'm not putting zones here because the market, I don't want to have a resistance zone right here when I know the market is probably going to make an attempt to fill the gap at some point. I don't want to step in front here knowing that there's good odds, because markets like to close gaps, right, of filling here. Now, in addition, I won't need that gap. Let's say we open at 1865 and 3/4, right? So I'll know immediately from the close down to 1865 and 3/4. Okay, this will actually end up being half gap if that's the case. But what I'm going to want to do is I'm going to want to consistently move this down. Let's say we were, I didn't mean to do that. Let's get rid of that. Let's say hypothetically we trade down to this 1861 before finding responsive buyers. We trapped above yesterday's low and we start to push up, right? I know that this is going to be my first area. I know this is going to be half gap right here, right? At this point, I don't and I won't step in right here. What's the reason for that? Well, because all of this right here is poorly auctioned, right? And even if we're going to push the right, in other words, the half gap makes sense if it comes right here. But the half gap, I will not take it if it's right here, because there's nothing for me to lean against until right in this area right here, followed by the risk, right, that we push all the way up and complete the gap, right? And we could certainly simply come off here, reject down, and then slowly work our way back up, and then reject lower or continue to push higher and test Thursday's high again. Okay, so remember, yesterday's range was 1878 all the way down to 1863. That's a 15-point range. As violent as it was, the range wasn't actually that big. We've had 20 to 30 point ranges as of late. Okay, so this is essentially half the range we normally have. The reason people were getting so screwed was this was poorly auctioned and the moves were violent through here. Most people expected half back, and what I was looking for was half back, and I was actually trading against this structure right here and a move lower. Obviously, we're starting to get that move lower now, but they wanted to come back and re-auction here, and unfortunately, that's just because we did such a poor job in this area auctioning it the first time through. Okay, so you know where I want to buy lower. Let's go through this scenario higher. If we can work through all of this and get above Thursday's high, and it'll take some work to get through here. I don't expect them just to zip right through, right? I would expect responsive sellers first time into Thursday's high, and I will take a short up here, almost no matter what, short of a opening drive higher, which it certainly doesn't look like we're going to have that, right? Above there, I would expect responsive sellers first time into this 18.75 to 1882.50. Excuse me, I need to adjust that. This should be 1880.50, and this should be 1876.50. Okay. I expect responsive sellers the first time in here as well. With a bit of caution, I would like tick divergence because remember, we'll have just broken Thursday's high. That'll probably cause some shorts to get squeezed, and I would actually am going to look for trade placement back here. It does not mean I won't take the front of the zone. It just means I'd prefer the back of the zone. Taking the back of the zone gives me two advantages if it's the first time in. First of all, I only need to get back to the front of the zone to get my 2-point scale. And secondly, I know that I got rejection there the first time in pre-market. We had sellers there. Above here is a problem, okay? And we really don't have, okay, there is a resistance zone here. I'm going to label this weak, okay? It would be a good stretch into this point. Again, 1872. I'm pretty sure that if we can get above Thursday's high, 1890 becomes a possibility. Again, from our lows, that would be a 25-point stretch, and we're breaking lows on NQ and ES out of the gate. And again, I want to be clear, my concern becomes under 1863-ish, okay? If we don't reject quickly and get back above, there's a lot of room to the downside, all the way down into those all the way down into these 1850s, particularly this area right here. And again, if we open at this 1863 and we have an open drive lower, I'm going to need to see quick rejection out of here. Let me get rid of the half gap thing. And then I would, again, look to the half gap, but realize, again, that if we start to auction back up, right, we're gapping down. So we're gapping down at this 1865.75. So that essentially, if you'll imagine overnight, right, we would have a big bar that would look like this, okay? What the market likes to do when we get these big bars like this is come back and re-auction those, okay? So keep that in mind. If we can't re-auction all of it, obviously half gap would be the first indication of extended weakness, okay? And then what we'd look for, 9:30 to 11:30 as a potential reversal point. If you're having difficulty in the first hour, it gets easier after the first hour at 9:30 to get your trade setups. So that's basically my trade plan, is to look for areas. Instead of getting involved in all this mess, my easiest trades will be from areas lower, particularly 51, 51, and then this 43 to 39 range, somewhere in here. Those are the two areas I'll definitely be taking trades. Like I said, expect responsive buyers from this 49.25 to 51.25. This zone will depend on the velocity at which we hit it and whether I can get tick divergence here. So I'm looking to take a trade here. I'm just not sure that it'll set up properly. And then back on the upside, I'll take a trade at Thursday's high. And then I'm also looking for the traps, where the traps, getting back above Thursday's low, would obviously push us for an attempt back to gap fill. Okay? And then the other side of that coin is if somehow at this point we get back above Thursday's high, right, and then we reject here and get back below Thursday's high, I would look for a rejection and then move back to the other end of the range. I'll do my best to call that out. So I hope that's clear. I'll go over NQ really quickly since it's been leading us up and down. Let me pull up my NQ chart really quick. I hope that was helpful in trying to explain where I'm taking trades. Oh, I have one more point. Spoke to someone yesterday afternoon, and they didn't take their trade. A particular trade isn't a trade that I have. It's basically the half back. A lot of traders work off of it. I don't think it's not reliable enough for me to take it, meaning simply half back of the range. They measure whatever the extended range is. They measure whatever that half back is, and they expect rejection there. I find that's less than a 70% trade, so it doesn't fit my criteria for taking a trade based simply on that. Okay, but if it's in your trade plan to take a half back and you know that's your setup, okay, then what you owe it to yourself in order to get consistency day in, day out, right, if you know your odds, structure your trade size relative to your count so that you can take that trade each and every time, assuming it meets all your other parameters, whatever that may be. But if your trade's halfway back and you're scared to take it when it sets up, you're going to have a very hard time getting consistency each time. And what my goal is when I'm taking a trade is to be able to take that same trade 10 times in a row and execute it perfectly, meaning my entry, my exit, and my stop. Why? That's what develops confidence in my ability to execute. Now, if you see a rip down like this, and you simply say on days where we have open drives lower and we display extreme volatility with markets moving very quickly, I don't trade, well then that's fine. That's part of your trade plan at that point, and you have followed your rules, okay? But the way that you cause damage to yourself is you go, half back is my trade, I take it, right? And then you get there and you hesitate because it is so volatile, and then you get mad at yourself, right, for not taking the trade. You go, that was my trade and I didn't take it. So you put yourself psychologically in a no-win position. Make it easy on yourself. Accept the risk, whatever the stop is for your particular parameter on your trade, right? If your rules say you trade on this particular day, yesterday I said I wasn't trading in the first hour, and I didn't trade in the first hour. If you're whatever you set your rules out, whether you set them by the day or you set them as they're static day in, day out, right? Follow those rules. If there's a problem with the consistency in them, then you need to go back and look at the rules and your structure of the market instead of constantly trying to guess whether that particular day that zone's going to work or that location or that trade setup is going to work, because that's what prevents most traders from gaining consistency day in, day out. Once you know that you accept the risk and you're going to take that trade each and every time, there's not a lot for you to think about. You either take it or you don't. Now, if you're not sure that that trade works, then wait, paper trade it until you have a paper trading wow, I'm losing the word, but results that show consistently day in, day out over a variety of markets that trade works. So you can ease your mind, and once you ease your mind, you can simply focus on the price action and the structure of the market, right, to look for those subtle hints that'll help you get better trade location versus trying to guess each and every time whether you're going to get paid or not or whether you're worried about getting stopped. Occasionally when in my particular example, and I want to stress this, when volatility gets wider or I'm at a key area and I definitely want to take a trade, what I do, and it's in my trade plan, is I cut my trade size in half, and I generally will increase my stop because I know on higher volatility it's going to require that, right? And that's how I cope with that. But it's written into my trade plan, so I'm not figuring it out on the fly. If you can do that for your trading, it'll make a world of difference to your ability to execute on a regular basis. So quickly on NQ, and then I'm going to jump off. There we go. Okay, NQ, same situation. All of this was very poorly auctioned, easy to rip back up once you see it rip back down. And if you wait till later in the day when we built structure, it certainly got easier to take trades. And yesterday we had two beautiful traps, one off the prior day's low right here, and one off of, I believe it was Globex high. It tried to get above and then trapped back below and moved here. I forget what was here yesterday, but this area was important, and set up a nice trap to the downside. So all that being said, today, right, we know underneath here, right, as you can see, we're currently 35.59.50 is Globex low. And basically it looks like I'm going to be adjusting both the Globex lows right into the open, right? So, A, I know there's another danger of a possible open drive lower to begin with. B, I know that we've been ripping both ways, right? Pretty easily and consistently for days now, right? This hasn't been a new phenomenon. Yesterday was just more violent than the other days have been, right? So, open drive higher is a concern. We've had them day after day on NQ. I'm aware of it, and so I'll probably wait on trading NQ at least for the first 15 or 20 minutes to make sure I don't get caught in this. It really sucks to take a series of stops in the first 30 minutes. And so if you know we're in this environment, you know the computers have taken over this particular deal right now, let them settle it out after the first 30 minutes. It tends to get easier in NQ. Okay, so down here, when I look, on the way back up, there was structure right here, okay? We have Globex low right here. So I know the first test is I got to get above this structure. I usually don't have this in my charts. I know gap fill is all the way the heck up here, right? And if we open here, I know that half gap on this is going to sit approximately at the bottom of this structure right here. Let me see if I can get that out from here, right? And if we open right here, okay? And that would actually make some sense to get some rejection the first time. But again, remember, essentially what we have on a gap down is a huge bar, right, that's unauctioned. And the market tends to like to come back and re-auction. If we can't get above half gap, that would be a sign of weakness, right? So my first question is if we go below this 35.59.50, right, I want to see if I can get some responsive buyers off prior day's low, okay? If we get back above Globex low, that could push us to the other end of the range, which would actually make sense to give us gap fill. And range-wise, right, yesterday we had huge range on this thing. The high was 36.08, all the way down to 35.44. That's 60 some odd. That was double the average range. Is that right? 60? No, it's actually been the average of the larger ranges, just past it, right? So if I were looking at this and I want to know where I want to take my trades or where I want to start to look for structure to support my trades, right? So 35.85 brings up 35.55. Okay, so I know that's fairly poorly auctioned, right? So I probably want to move down until I find an area that's well auctioned, and that brings me into this, all this back here, right? Below, but I am cognizant that I get into pretty hairy territory right below this point right here. Okay, so that brings up 35.33 to 35.30. essentially, right? And I also know that if that's the case, 35.85, 35.30, that brings up roughly a 55-point move. I know that 60 points has been the extension, and I also know that when we re-auction areas, right, that we don't necessarily have to auction all the way down and re-auction it all in one day. You can come in and simply auction a small portion of it, get back above, and then come back in and rework on some of this area that would be poorly auctioned. So keep that in mind. If you see NQ has been leading up and down, if you see NQ starting to push new highs on the RTH, watch for ES to follow. If you see NQ pounding out new lows like we did the other day where it was trend day down, it has been dragging ES down to the downside. Explain how you execute the trap trade at Globex low. Mike, I don't have enough time to do that right now. And just to give you an idea on the trap trade, so Jackson is the guy who executes that best of the guys I've worked through, and it took him pretty much, I'd say, 2.5 to 3 months until he really saw all the parameters needed to set it up properly and get completely consistent at it. So it's really not a 1, 2, 3. This is the setup. It's a harder setup. There's more stops than there are at the ES zones. Okay. However, the risk reward is higher. So I may do a webinar on it, but it takes time to get it right, and it takes a lot of practice. The practice, when it works easily, it's beautiful. The problem is, how do you know which time is it going to work beautifully and which time is it not going to work beautifully? So if you'll, I might do a webinar, but I'm not going to cover it right now. Anyways, I hope everyone has a great day. It's 8:28. I'm going to take 5 minutes, 10 minutes to get reset. I'm concerned about an open drive higher. I know the first hour was incredibly violent yesterday, so I'm probably going to sit out the first 30 minutes, let the market make sure to check for data at the top of the hour. I don't know if it's there. And I'm going to go through my checklist, make sure I've done everything properly before I get trading, and make sure that I get realigned with what my goals are for the day, which is to follow the process, not what the market is necessarily doing, and not trying to make X number of dollars, but make sure I get my proper entry, my proper stop, and my proper targets so that I can continue building my trading account. Anyways, everyone have a great day. I hope that helped out, and we will talk later.